A business update now. A big change for the world's second largest cryptocurrency went live earlier today. Ethereum has completed a major software upgrade called the Merge to make its system more energy efficient. Well, the long-awaited upgrade changes the way it creates tokens from proof of work to proof of stake. Well, for more, Henri Arslanian, co-founder and managing partner at 9 Blocks Capital Management, joins us now. Well, Henry, touted as a key moment for the crypto market and one that would prepare the industry for mainstream acceptance. Will that happen, and would it go some way in turning the tide in the crypto downturn?
Well, absolutely, Liz. I think today was a historic day in crypto history, not only Ethereum history, but broader crypto history as well, with Ethereum migrating from proof of work to proof of stake. I think we have to understand the importance of this change that took place. I mean, Ethereum as the second biggest digital asset, as you just mentioned, has over $200 billion of market cap. It's a bit like a company like Toyota or Shell that has about the same market cap. Overnight, while it continues operating, completely changes its back end. And this has a lot of practical implications. So one of them is the energy consumption you just mentioned. The electricity consumption of Ethereum will go down by 99%. And there's also a lot of other benefits as well. One of them is actually it brings the inflation rate of Ethereum from about 5% to almost 0.5%. So there's a lot of these big elements that were actually symbolic today and actually quite important in the history of Ethereum. As you mentioned, it was planned for many years. It was not easy to execute, but obviously it was a very good sign that actually this took place today in a very smooth process.
Yeah, so, the merge claims to be more environmentally friendly, slash Ethereum's energy usage by 99%. So what does this mean for the bigger crypto sphere, especially since Bitcoin mining is still quite energy intensive?
Absolutely, Liz. I think if you look at pre-merge, as of before today, the Ethereum network consumed more or less 75 terawatt hours, which is equivalent, if you want, on an annual basis, the electricity consumption of Chile. This was Ethereum alone, according to some conservative sources that look at the environmental impact. Now, of course, by that being cut by 99%, will radically change the approach and the perception of Ethereum, especially when it comes to institutional investors, some of the large allocators, and corporates who want to interact with the Ethereum ecosystem, for whom ESG and actually sustainability are very important elements. And this is for Ethereum. The same goes also for Bitcoin. There's been a lot of progress over the last couple of months when it comes to Bitcoin mining as well. Today, according to the latest data that we have, around 60% of Bitcoin mining comes from renewable or sustainable sources, which is up from almost 30% a year ago. So obviously very positive for what's happening with Bitcoin and sustainability, but especially with Ethereum today, very big news for those who want to see more sustainable and environmental friendly digital ecosystem.
Yeah, and of course, now comes the million-dollar question, right? With this much-awaited event out of the way, should investors brace for more volatility ahead in Ethereum as well as other cryptocurrencies?
I think the volatility in crypto markets is not really a factor that is linked to what's happening with the merge today, but really on broader crypto markets and broader financial macro markets, including macro factors, whether it's yield increases and inflation figures. I think what's really important to understand is despite the bear market we've been seeing in crypto, a lot of capital is coming into the industry, especially when it comes from institutional investors. Literally almost every week, we are seeing some major developments, either of traditional financial institutions entering the space, or even some large sovereign wealth funds or of institutional investors invest in the space. Singapore is a very good example, with some Temasek recently leading another $100 million round in another crypto project as well. So despite the headwinds that we are seeing when it comes to crypto markets, really some of the investment in the space has continued to at the same pace as we've seen in the previous bull market.
And so, Henry, what's next after the merge? Well, we've got the energy saving bit down, but what about regulations, so that we don't see more crypto platforms go bust?
Oh, absolutely. There's a lot of work. Being in crypto is a continuous improvements taking place. Even with regards to the merge, yes, the environmental impact has been solved, but other things, for example, the speed of Ethereum has not really been fixed. Today, a transaction takes place in about 13 seconds. Now it's going to be 12 seconds, but just a 10% advancement is not really something material. Also, when it comes to gas fees, which is a transaction fee that users pays on the Ethereum blockchain, went from anywhere from $2 to $20, in the last year. again, the merge is not going to impact that. So there's still a lot of actually technical developments that will take place when it comes to Ethereum. And on a broader regulatory front, we're really seeing, Liz, continuous regulatory advances being done. Yes, some regulators looking at it to try to get rid of some of the bad apples. We've seen the last couple of months many players that were involved in lending activities and frankly, I didn't properly do proper counterparty risk and risk management activities. And obviously, this is actually hopefully some of the regulatory clarity and increase that we'll have will try to make the industry a bit safer, especially when it comes to retail investors who are the ones that actually regulators are looking mainly to protect from that perspective.
Oh, thanks for that, Henri Arslanian there from 9 Blocks Capital.